Hey, everybody. Thought I'd fool you and come on 20 seconds early. How's it sound? How are you guys all doing? Everybody good, good, good? All right. It's now 5, 4, 3, 2, 1. It's now 6 o'clock, 5 o'clock. For those of you on the West Coast, I don't know if you remember, but I did try to give you guys a chance. And we did one of these at 8 o'clock East Coast time. And attendance was just the same as always. So you guys kind of blew it. You had one chance. I know a lot of you just pick these up on the recording. That's fine. But it's fun to be here live. It's fun to be able to ask some questions and yell back at other people, that type of thing. So tonight is called Big Picture Price Action. This again is an impromptu session. I started these about a year ago. So I still have the normal full-blown DTS educational event that is typically the first Wednesday of the month. So that'll be next Wednesday. These can come up whenever. I get an idea, I want to talk about it, too much to put in an email. I do a lot of extended emails sometimes and charts and that type of thing, but sometimes I want to yell at people and I can't yell on an email very well. You can, but it's not very effective. So I get together with one of these. We hold them to 30 minutes. The last one I did go over a little bit. I'm not going to do that. Going to keep them to 30 minutes so you guys get in here and out of here. Big picture price action. What are we talking about? Not big time frames. That's what I mean by big picture. I just mean a bigger concept of how you look at things. Not big time frames, but just big picture look at whatever time frame you look at. Now, we all look at the market different ways, if you're trained or untrained. If you're untrained, naturally I'm going to yell at you because you probably have a very poor way of looking at it, mostly subjective. But if you're trained and if you're trained at DTS by me, there's a certain way we look at things, but there's a lot of ways to look at things. I've never, ever have I said that my way is the only way to make money. What I always ask is, do you have a way? And I look at things a certain way, but I'm not talking right now about whether you look at the market through your own prism of stages or cycles or Gann waves or Fibonacci or none of those, because none of those make money on their own. They're all structure. And structure sets the framework in which you operate, but you don't make money from any one of those. So I'm not here to talk about the specifics about trading and how to make money. You know I don't do that in these sessions. This is a bigger picture. However, it can be extremely helpful for a lot of you. And I think this is probably going to be most helpful to newer people because you get a certain perception of how things should be. And you have to know by now that the market is very counterintuitive, right? It's very unintuitive. That's proven by the fact that, X percent of people that come to the market lose. You hear the numbers, 95, 90, 80. It depends what you consider to be losing. I've gone through that before, but clearly people, especially the ones that come to swing trade is the worst category for being successful, day trading. The only people that have success are longer term holders that just don't touch stuff that are riding a bull market. You do good doing that until the bull market ends and you don't know what to do. So I'm here to discuss some big concepts here. What are we going to look at tonight? Intro comments, 31 minutes long. That's my time limit. Art, get that stopwatch going. 3 pictures that we're going to look at. And one of them I kind of ruled out already. Hardwired. I want to talk about how people are hardwired when they come to the market in a very, very wrong way. This is a picture I've used before. It's the picture I use to represent a random walk. And there's one in the middle here I'm going to do right now because I decided not to put it in here because the other slides I think were so good and then this one got a little off track. So I just want to cover it now, but this is the type of big picture thing I'm talking about. Quick quiz question for everybody. We have uptrends, downtrends, and sideways trends, right? Those are the trends that exist. I think no matter how you learn or how you understand technical analysis, this, everybody says, yeah, I understand that. When an uptrend ends, what trend comes next? Most of the time statistically. When an uptrend ends, what trend comes next? Most of the time, or when an uptrend ends, right? When an uptrend ends, yeah, correct. When an uptrend ends, what comes next? Most of the time statistically. Yeah, I'm teasing with these first 2 answers because they are well-educated students of DTS and they know the answer. It's up. It's going right back into the uptrend. And naturally, this befuddles people because your basic 101 understanding is we have to go sideways, we have to go down. And naturally, this is a very soft comment. I always want to distinguish what I say. This is not something that you can very readily go look up because the statistic would depend on what do you call an uptrend, how do you define an uptrend, how do you define a break of an uptrend, how do you define getting back in. I'm just telling you from looking at charts for years and years and years and years and years and understanding the problems and the hiccups. This is what happens most of the time. If you're really in a good uptrend and you go back and look at the market, go look at the QQQ, daily chart, weekly chart, just look at the market itself. I didn't put any example charts in here because I decided not to do this particular one because I was going to run over. But if you look, the QQQ has been an uptrend for well, it had some hiccups, but it had a 12-year run almost. And in that 12-year run, it broke the uptrend a lot, and then it just went right back into an uptrend. So just keep that in mind that this is a big picture thing I'm talking about, big picture price action. There's that misconception all the time. And I think a lot of people lose money simply paying, I know it's an old adage, but simply playing against the trend. And that even includes when the trend breaks. The trend breaking is not necessarily a good idea. And naturally, if you're a DTS student, we talk about transitions and exactly how you do that so you never get in trouble. So let's go on and move on from there, because that's all I'm going to talk about that one. It was a little off as I went. Sometimes you have these ideas, you put them down, and then as you fill in the meat, you kind of look at one and say, you know what, that one is just going to be distracting. So that's all I want to say about that. Let's get on to this one, though. Everybody's hardwired when they come to the market. Everybody loves a good breakout. Why does everybody love a good breakout? And I say everybody, number one, I'm probably talking about newer people drawn to the market. So if you're an experienced trader, maybe, maybe not. And number two, I'm calling this a breakout. And I got to be very careful with the wording here, because when I say the word breakout, I'm using it as a generic English word, right? Right, Eric? Now, if I say a DTS breakout play, there is something called a DTS breakout play. That's very exact. I'm not talking about that. I'm talking about the general trading word breakout. Put big air quotes around it, right? It's exciting, right? Okay, Mark has a great one. Mark, everybody is hardwired because they've seen the examples where you got an example of a breakout and holy cow, you got this, whatever is defined a consolidation, and wow, that's what you see. People go, holy cow, because somebody is showing you this, or you see examples, or you look up what a breakout is, and you go, wow, this is what I want to do. This little tiny stop in here, and it ran 17 times the stop. What a great play. Why else do people get drawn to these? I think that's the number two reason, Mark. Why else do people get drawn to these? By the way, DTS has the DTS breakout play. I'm not saying this is a stupid thing to do, but the way most people go about it is very stupid. Go on, we're in an impromptu session. You have to type faster. They think there'll be no sellers because. Okay, well, there's a good thing, Eric. A lot of people have a tremendous fear because they've gotten bitten, they've gotten in trouble, and they feel in their head that if there's nothing immediately there to the left, that it's got to go higher, right? Which is not true, right? Sometimes it's true, but it's not true. There are many trades where there's nothing to your left and nothing above you, but yet you get killed, right? Some of those, the hardest things, are the most resistance-filled type of trades you could do, but it looks like there's nothing there. So it's not always true, but that is what some people think. Yes, it's boom, new territory. That's right. There you go. You guys have them. It's intuitive. It's easy to identify. There you go. That's what I actually have on the slide. It's because they are so darn easy, right? How easy can it be? You find I'm going to use a word from Investopedia. You find a consolidation and you wait to break above the resistance or, below. And of course, naturally, you could also have a breakdown play breaking below support. Nobody even knows what that is, but breaking below support would be a breakdown play because they're easy, right? Everything is a breakout. And the way people use the term breakout, everything becomes a breakout. Now, the problem is that what percentage of the time is the market in some kind of a nice trending pattern, and what percentage of the time is it just messy and sloppy? I think if I understand Eric, he's being sarcastic. What percentage of the time is the market in beautiful, trending type of patterns, would you say? And this is going to end up being an opinion, because once again, I looked up stats for this, but it's just too fuzzy because it depends. Myron, that's amazing because that is one of the statistics said that, but it depends, again, what do you call a nice uptrend, what do you call a nice downtrend? It just becomes subjective in terms of what parameters you put on it, right? Right, and I would say my answer is between 5 and 25% of the time, and 25% would be almost a rare period of time. But I mean, when you look at the whole, take a look at a daily chart over 10 years, or take a look at a 5-minute chart over 3 weeks, whatever you want to look at, I think you get in patterns where all of a sudden, hey, yeah, that's pretty nice. It stays away well, but the truth of it is that the vast majority of the time, doesn't matter what time frame, Mark. Pick any time frame you want, right? Any time frame you want. It's not going to matter. They all are going to have a similar concept where they're neat for a while, they're not neat. Now, you may say, and I agree, that the more the daily chart is tight and precise, the more likely the intraday charts are also, right? So that's true. But just basically speaking, my point is simply that whatever stat you look at, possibly up to 95% of the time, and Richard says 99% of the time, which I wouldn't argue with, things are sloppy and all over the place. And yet, what are traders trying to do? In other words, if this is the pattern going on, and by the way, I don't have to look far to find it. I tried to look for a chart that showed a typical messy pattern. It took me 4.3 seconds. I timed it. There it is, 4.3 seconds. Let me come back to my drawing. There's a chart I pulled up. It was the second chart I looked at, seriously. Second chart I looked at. Is this a nice trending pattern, anybody? Could you, Eric is in a sarcastic mood today. Could you make money from that? Well, anything could happen, right? I mean, somebody could drop a bag of $10 million off an airplane. It could land on my front porch. That could happen. But this is a mess. I mean, the right question is this a chart that any trader would look at and try to make money? And the answer is no, nobody should be. But you know what? Guess what this is? This is what you see most of the time, right? But yet, what are traders trying to do? You see my point I'm getting at? Is that I love the slop. Why not play the slop? Why not play? And I have a whole presentation I did a couple years ago. It's on the Platinum page. That's called Make Your Money from Normal Moves. In other words, instead of trying to go for, here's your little consolidation rate, whatever's going on. And instead of trying to go for, wow, let's go for this, which just does that 80% of the time, why not do this? And you may say, well, the move's not nearly as big, but guess what? You can actually make more money because you're looking at possibly here to here rather than, here is your stop to wherever. And it's more precise, it's more accurate, and actually it works better if you short the top in most of these. So my point simply being is that people come to the market and they just have this idea, right? And they just keep thinking big moves, big breakouts. Look at crazy stocks. Look at stocks that are going to run 20. I had this, well, you want to call it an argument, but a back and forth with somebody by email that he's just sending me trades from crazy stocks. These things, these $3 stocks that move $3 a day. I'm like, why are you doing that? He goes, oh, I need the volatility. Well, why do you need the volatility? You don't need volatility. The simple question is, if you have a stock with just this boring stock and you find a 20-cent stop somewhere and it moves 40 cents, guess what? You made twice your money. If you have some crazy stock that's all over the place and you got to use a $2 stop and it moves $4, you made twice your money. But this way, stops out a lot, gives you headaches, gives you heartaches, it's dangerous, no need to do all that. So people are hardwired to do this. And this is, the concept here is big picture price action. This is what I'm talking about, just in a big picture. Stop trying to do the hardest stuff. What percentage of my trades would you say that I have categorized, labeled after the fact as being a DTS breakout play? I have an approximate. I didn't actually count them, but I don't need to because I know within, not even 5 art. If you actually look, it's probably 2%. It's probably 2 in 100 trades that would actually say there's a I happened to do one, well, it was just 2 weeks ago. Because I think you were asking about it, right? Somebody was asking about it. They said, why? Oh, it was in a presentation, the last presentation I did. I think I had one in there. I said, it's very rare, right? Because you need an extremely great set of circumstances set up, right? But again, it all comes down to how do you do that. So this gets to the point of what I was talking about, that if most of the time things are just messy, it begs the question, a lot of people say out there, a lot of the boo-hooers of technical analysis say, well, the market's just a random walk. Is the market a random walk, everybody, yay or nay? Is the market a random walk? Random walk means it's just wild price all over the place, undecipherable, nobody can figure it out. Yeah. Well, yes is the wrong answer, but it's close to the right answer, because Eric has it, because he's heard me say this, I'm sure. The market's random walk most of the time, and that's what you have to understand. And that's why so many people struggle, because they come and they say, oh, I have to trade Tesla. That's one of the things that drives me nuts. Why do you have to trade Tesla? Oh, because it's volatile. Oh, because I like the company. Oh, because whatever. And then you're stuck with this one pattern. And guess what? If you tune in any one pattern, I'm going to give you a percentage here, and this is not made up. 97% chance it's not tradable. Now, when I say not tradable, of course, anything's tradable. But I mean 97% chance there's not a discernible pattern that I would take a trade on. Does that make sense, everybody? Now, why do I say 97%? Some of you know the answer to that because I've said it before. Because every night I scan about 1,000 stocks, and I'm lucky if I save 30 of them. That means 30 out of 1,000 stocks caught my eye enough to say, I'll look at that. Not a trade, not even a setup, just something, caught my eye. And it probably gets cut in half by the next morning. That means 97 out of 100. I don't even want to stop and look at it again. Now, could I say intelligent things? Could I answer questions? Could I say, oh, you know what, if this messy thing, rallied to here, I'd short it. But what are the odds it's going to happen, right? You can't save every stock under the supposition that, oh, maybe it'll do this 5% chance thing, right? Because then you're going to have 1,000 things to look at every day. So just looking at normal look at charts, most things are a random walk. The vast majority of the time they are. Once again, I'm getting back to the point that the average trader is looking for perfection in a market where perfection rarely exists. Does that point make sense, everybody? Again, to me, this is such a big thing, especially if you're new, because everybody comes in hardwired the wrong way. They come in with the wrong idea. Now, where would traders get this idea? Where would traders get this idea? Where would you get this idea that breakouts are such a wonderful thing? Well, just for fun, I went and looked up what a breakout is. Now, I did something similar a long time ago, but not with a breakout. This is brought to us by our friends at Investopedia, which is probably the biggest online trading definition site. I have said that DTS is the biggest site out there for useful free information. Useful is the key word, because while there's an endless supply of information at Investopedia, you can keep, see all these, this is a picture, but you can keep clicking on all this and clicking, and every time you click somewhere new, there's something new. There's an endless, continuous chain of information, but guess what? It's all dribble. I'm not saying that because I have something against Investopedia or anything else. I'm just warning you that this is pure dribble. If you go through and read this here, this is a copy. I have two slides here that are just kind of saying what a breakout is. And you go through and read all that. Do you know what's missing from that? Their whole definition of what a breakout is. Do you know what's missing? You can read it here. Breakout is potential trading opportunity. They're very careful with the words. Potential occurs in asset's price, moves above resistance levels, below support. First step is to identify current price trend patterns along support and resistance levels. Once you've acted on a breakout strategy, cut your blah, 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 blah. And then the next one here gets more detailed. Stock moving outside of defined support and resistance levels, and they define support and resistance like it was a kindergarten class, blah, 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 blah. And guess what? Well, there's absolutely no detail, but beyond that, the single most important thing out of breakout is missing, and that is where it occurs exactly, where it occurs. Because they will include a breakout being this. And any DTS students, could you tell me what you think of this being a breakout play? I don't have time to wait for you. It's not allowed. It's not allowed. You're not even allowed to do that. If somebody sent me that trade and said they did that, I would not even talk to them. I say, go redo the whole home study and talk to me when you've redone it. So the single most important thing is not even defined. You know why it's not defined? Because it involves an in-depth understanding of price action and price analysis to know when a breakout is even going to be the highest odds type of thing. Look at these, Eric, I'm sorry, you, and any other seminar students, and Eric especially, because you're very astute here, you may want to look away. This is like when the news comes on and there's a gory accident or something. You may want to look away. Okay, here's the first example of a breakout. There is a breakout. Eric, if you sent me that trade, Eric, and said, Paul, would you analyze it? What would I tell you? That's their example of a breakout. Yeah, and that's nuts. I would never take that. Now, of course, they show you one that worked. I mean, of course, anything works once in a while, Rising flag. It has to be art. You have to look and know that was art. I think I call it an ascending triangle pennant art, isn't it? Under the blue moon of the grizzly bear. This is an unacceptable trade. I mean, you'll never make money doing this if this is what you do. And yet, there's their example of a breakout, right? Are you ready for this now? It gets even worse. I put laughing my anterior end off is what that stands for, in case you're not sure what LMAO is. There is what they call a breakdown play. Again, not allowed to do that. It worked. Of course it worked, or they wouldn't have it as an example. The most unreliable thing in the world. I like that chart. I would love to short that chart, but I would never short it where they're telling you to short it. It's just absolutely ridiculous. So this is where people get this idea. This type of trading, you'll be losing money. You won't even make money for a short period of time. You'll just be losing money, period. That chart, that's a 1 in 10 chart. That's what it is. And it probably happened because whatever this is, I don't know what it is. there was something going on at the time, news came out, market broke down, whatever it was, but a very, very rare event. So let me give you a couple of examples here. Now, I was going to do this event Tuesday, remember? And I had over the weekend, I sent something saying Tuesday we're going to have an impromptu, and something came up for me. So I actually had put some trades together from Monday. I actually had to redo the charts because you ever, I don't know what TradeStation does this once in a while. Like sometimes when I start it up, it doesn't fill to the top of the screen. It leaves like a 3/7-inch gap. And I don't notice this sometimes. And then I have one of my pages set up with a fixed picture area. So I just, snap a picture. I don't have to circle it. I just snap a picture. So I snapped all the pictures, and there was like a gap on the top of the chart, and it was missing whatever it was. It was pushed. Yeah, so the top of the chart was cut off and the bottom of the chart extra stuff. So I had to redo some of these pictures. But these are the things, these are 3 things from Monday. I just want to show you as an example. Now, remember when I do events like this, I don't ever like going back in time to find trades just to think I'm showing off trades. So I took all these from this week. They aren't the absolute best examples of my point, but they do make the point. Unfortunately, some of these are so nice that you can kind of trade them either way. Well, no, that's not true. So these are not great examples, but these are all from Monday. So this is Tesla. Yes, I trade Tesla once in a while. And based on what I've learned from reading and based on what a lot of people do, and again, the most common thing I get from traders is I went long here, over the high of the day, over resistance. I took a breakout. People call that a breakout. There's some people in the room that call that a breakout. Got long there. Well, if you got long there, one of 2 things happen, right? Either you stopped out. If you didn't stop out, it means you put your stop way down here. And that means that if your stop was there, you have to travel all the way, to here to make 1R. So you made 1R by the end of the day, assuming that you did and you hung on to that. The next breakout was there. There's the next breakout, and same thing. Either you had to put your stop way down here, or you stopped out, or maybe you told me you put it somewhere else after the fact, whatever it is. This type of trading is terrible. This is from insecure traders that don't know what to do, that don't know the chart, that don't understand the better ways to get into it. Now, think about what I'm trying to put together. If the market is kind of a random walk, if things just kind of more or less return to the means rather than always break out to new highs, this type of a breakout was really a good trade that day. That was an above average move, right? Agree, everybody? This is an above average chart, right? Took some skill to find that chart. But if you have the lack of skill, you're getting in over the highs, you're barely making money. So you have to have the skill and knowledge. There's the numbers I actually did to not do that, because that's just idiot speak. I would never do that. Art, have I ever done a trade like that in the whole time you've known me? Maybe someday I came to the market drunk or something in the morning, even though I don't drink. But I do some bad trades. I'm not saying I'm perfect, but I would never do that. My hands just couldn't hit the button. That's against my will. Yet that's a very common thing for people to do. So you have to understand the charts well enough. And again, this isn't a training class. Here's the daily chart for what it's worth. That was part of the thing for me this day. I don't trade Tesla often, right, Art? As a matter of fact, somebody said I only traded it once in the last 6 months, and I think they were right. So again, I don't look for Tesla, I look for charts. And I came across this daily chart. I didn't know what it was at the time. You even flagged it, and guess what? And then we get this nice setup. But you have to know, if you look at trade 1, I took 2 trades on this. So entry was under 247. So somewhere in here I got in. And that was even kind of late for me. I mean, even that I'm not proud of. But you can see if you get in here like this and this, the profit becomes much, much more up here. And the likelihood of not stopping out becomes much, much more, et cetera. And then I took a second trade right in here. So again, now a lot of you may recognize that and say, oh yeah, I would have done that too. I wouldn't have done the breakout thing. But I'm just trying to get across that to make money, because the market isn't always breaking out, because and when I say the market, I'm just talking price action. Sometimes we say market instead of price action. But since price action isn't always exploding, and it's extremely difficult to find the exploding ones, and if you do, you set yourself up with the negative that, hey, your stop has to be crazy also. But rather, why not find kind of more boring things? And yeah, this Tesla was boring this day. Tesla's boring to me. And learn how to enter in such a way that you can make money from a normal move. In other words, this made over the day's profit just getting to the prior high, where somebody else was thinking about getting in. Let's move on. If you have a question, let me know, because we're almost at the end of time for today. Number 2, ADI, a little sloppier chart. Everything's sloppier about this one, but I still liked it for some reasons. Daily chart there, I looked at that big support area here. I looked at this as being a little shakeout that day. Now for that day it was, but then of course you ran some troubles in later days. You'll see that it fell from there. So daily chart of interest, again, not necessarily the chart that I cared about. I think there's a 60-minute chart I like. Once again, if you're taking breakouts, I guess you're getting in there. I guess you're getting in there, you know. And hey, that last one would have worked. But again, what are you doing? You're making one-to-one on a pretty exceptional move. So rather than doing that, this is entered in the morning early, coming off that red bar. And again, this wasn't a great entry, and you'd have to come down to smaller time frames to see, but I got in here. So that even that's making a lot of money. And then and I held it all the way to here somewhere till, almost 3 o'clock. I did a pretty good job exiting. So it ends up being, a nicer trade. I actually gave this a fair amount of room. So it's a very high odds trade, but this is the point that as a bigger look at the market, people are focused on always trying to find something. Here's a good way to phrase it that just popped into my head while I was saying it that I didn't pre-plan. But people are hoping that stocks will have exceptional moves to cover for their incompetence. Wow, what a great phrase. You like that one, Art? New traders are always hoping for exceptional moves to cover for their incompetence, right? Because they can't find the right entries that, how many people would jump in? I think I got into this on the way down, actually. How many people would jump into that red bar on the way down? How many people would do that? You have to step back and say, I know that's going to hold there, right? Now, I don't always do it that way. I'm not even sure I did it that way that time, but you got to look for these little signs. So if you don't have that expertise, you're forced to just sit back and hope, literally hope, that whatever you do ends up having some incredible move. Here is the other trade from the day, AES, and this is just ended up being a pretty chart. The daily chart, again, not a big deal to me, the daily chart. The daily chart just said to me, hey, you don't have to pass this trade, it's okay. And this now, I pulled out a 1-minute chart here because again, this is where it gets really confusing if you're a summoner student, it's even a little on the advanced side. But this actually was labeled as a 5-minute buy setup. This is a 1-minute chart. I don't get scared about a 1-minute chart. I'm not a scalper, so to speak. I just want to show that this technically I can call a breakout because it is a beautiful 5-minute uptrend buy setup on a higher time frame. But this is AES, and again, just a nice quality trade where you don't have to look for huge moves to make money. There's always a balancing act, how much room you give something, you're going to have much higher odds of being successful, but you give up a little bit of the profit. And then of course to counteract that, sometimes you may find trades you can add to after you get into it. So that was my point I wanted to get across, and I came out with a beautiful saying that newer traders are always hoping for huge moves to cover for their incompetence because they can't figure out how to make money from a normal smaller move, right? Questions on tonight? I know today RGTI, I know. Well, it never was a home run. But yeah, I got out just a little under even. I had a small loss on it. It ended up at 30. So yeah, some money there I left. To me, the market was tankaroonie and didn't want to hang on to it. So, but it was nice. I got on the screen for tomorrow. RGTI might be nice for tomorrow. Questions, comments, anything else you want to talk about? Hey, Art, all or nothing today was over 7 hours. TQ, yeah, I stopped out of the queue short by 3 cents. That's because of a lack of conviction. Yeah, an all-day hold was a home run. Yeah, it was. It was terrible. And I'm glad everything else made money because that was not. That was a tough one. Sometimes, sometimes you're the dog, sometimes you're the hydrant. But still a good day. But the TQQQ was a 3-hour trade that I left behind. Yeah. It looks like most of you got it. I saw Ron had it. A couple other people said they had it. So nice job. At least some of you got it. That's okay. All right. Questions, comments, anything you want to talk about? That is a perfect impromptu session. A main theme, points well proven, finishing on time, and Art here to narrate the whole thing. Otherwise, I'm going to be saying, hey, happy Friday tomorrow. See you in the trading room. Have a good weekend. Nothing going on this weekend. The exact quote, Art, was that newer traders Hope for, maybe pray for should be the quote. I'm going to get into tip, one of those quick tips. Newer traders pray for big moves to make up for their incompetence. I like that one. That is, woo. And it's Art approved already too. Art's got his stamp of approval on it. All right. And that, Art, that was not pre-planned. That just popped into my head. I'm glad it wasn't something stupid because I just went ahead and said it without even thinking about it. All right, guys. See ya. Have a great weekend if I don't see you in the room tomorrow.